Then the housing opportunity came along. But when the opportunity came and became available, we felt it was probably the right thing to do. A lot of investors that at that time who were our existing investors said, "Hey, you're stepping into a sinking ship, and you sink along with it."
So let's get started. First of all, Dhruv, welcome to our podcast series on PropReturns.
Thank you,
Uh,
Jan.
Everyone knows about you, but still, I would want to give an introduction to our viewers about you. So Dhruv, you did your undergraduate at Stanford, then you did your MBA at Harvard, and after a good stint at GE, you started your own core mining business, and then ultimately you started your own financial advisory firm, which got acquired by Kavi, and currently you're a titan that is running three huge real estate platforms, namely Housing, PropTiger, and Makaan. So again, as I said, everyone knows about you. A very exciting journey we've had. So let's get right into it. So the first question I had, Dhruv, is
Just thanks, Jan, for the intro. Just one small correction. I did my undergraduate at Northwestern University,
okay,
and then I went to Stanford actually to get my PhD, but left for the masters and then my MBA.
okay, understood.
Yeah. So
Great.
thanks very much for the intro.
Yeah. So the first thing I wanted to ask, Dhruv, after you went to Harvard, you started working at GE. At the same time, you also started your own core mining business. So just wanted to understand your thought perspective. Why core mining? It's very traditional business, and not a lot of people foray into it when they start off with their first entrepreneurial stint. So just wanted to understand your thought process on that.
Sure. So, just a quick thing, just in terms of, sequencing. So, I wasn't doing the mining business while I was at GE. It was prior to my going to business school, actually. And it was iron ore mining. So, I after I got my undergraduate and graduate degrees in material science and engineering, I came back to India, and then I started the mining business. At that point in time, I don't think it was that non-traditional in that. I mean, or that traditional. If you see, it was par for the course. It wasn't seen as an old world industry necessarily. If you remember, this was back around 94, 95. I'm just trying to get my dates right. Yeah, 94, 95. And the internet boom had just sort of begun to happen, right? It wasn't even there really. We hadn't hit 2000. Just remember that, right? So it was as sort of normal as it could get. Today, of course, if someone went into mining, and not and wouldn't go into technology, then that question is more relevant. But that time it was exciting. I think India had just liberalized its entire policy on mining, on steel making, uh, and there was a massive opportunity that I saw, and that's what prompted me to get into this space. So yeah, there was no sort of particular reason. Another thing, of course, is I'm a material science degree holder, so there was some relation to what I studied at school as well. Although, of course, I did advanced materials, more like semiconductor materials. But if you want to draw like a tenuous line, and then the other thing, of course, is that you know. My father was in the minerals testing business, so obviously there was again some linkage there, which was very helpful for me, starting out as a 24-year-old.
Right. So did you get any conclusion on the mining business? Did it get acquired, or is it still running?
No, so look, the mining business, basically it had a finite lease, and once sort of the lease ended, government policies changed. They started auctioning out, mining blocks, etc. So a lot of large players got into the business, and hence, we didn't sort of rebid for it.
Got
It
it.
just sort of ran through its natural course of its lease.
Got it. And one more thing I was curious about, what made you make that jump to entrepreneurship? I mean, you were doing well after Harvard or rising up the ranks in GE, but then you started your own financial services firm. Why?
Look, see, it's one of those things where obviously I'd been an entrepreneur, after I graduated, from my engineering degrees, and then I went to business school. Post that, I joined GE. I did M&A for GE in the early years of my career there, and then I got into several operating roles, and then I moved to GE in India as the CEO for their infrastructure business, followed by sort of post that I joined G Corporate, heading all of sort of government sales, for GE, so representing GE as a single entity, to the government, which used to buy from us across different business lines, and not just one arm of the government. There's the central government, mostly state governments, public sector enterprises, etc. So I was sort of the guy representing, a single face of the company to potential buyers. So look, I mean, it was a very exciting, opportunity and a job. When I joined G back in 2002, it was one of the most admired companies in the world. I think to 3 years at a stretch. I think by market cap, it was either number one or number two. Very different from where it stacks today, right?
Yeah.
So clearly, it wasn't something which I was anxious to leave or do something else. But you have to again remember that post sort of graduating from Stanford, doing the entire mining business, going to business school in 2000, graduating in 2002, the world had changed significantly, right? The internet boom had happened, and the bust had happened as well. But I clearly saw that there was an opportunity long term to build an online consumer internet business. And financial services was one area where I believe that there was an opportunity, especially to access consumers through the net. And so it was like, in today's parlance, what you call a fintech business. Started that along with a classmate of mine from business school. Raised a Series A round, from SoftBank actually at that point in time, along with other investors. But the big driver was a wanted to kind of be in consumer internet. I realized the potential which it had, and second, financial services was one area where I felt that there was a lot of mis-selling going on. People were just not sort of equipped to make the right product decisions, etc. So we thought we could reach out to them, help them make the right financial decisions, and then basically help them buy the right financial product for them. It was really driven by that. Both a belief that financial services needed sort of tech intervention, as well as the belief that over a period of time, consumer internet was the place where I wanted to be.
Got it, Dhruv. So you started a financial services company, right? Saw a lot of potential there. Something very interesting is after that you started PropTiger.
Yep.
So why did you choose to foray into real estate industry, which is a very traditional industry, from financial services, which is very exciting for many people?
Look, I mean, look, I see financial services, as exciting as real estate, and both are, exciting in their own ways. Uh, so look, our company essentially, if you look at what we did, it was called I Trust Financial Advisors. So what I Trust did was it created online financial plans for people, right, based on what their long term, medium term, short term financial goals were. Took into account what their current investments were, current savings were, what their age was, what their current income level was, what the potential income level could be going forward. Of course, some bit of projections one had to make, but much like you create a balance sheet P&L for a company and then make future forecasts, we did the same thing for a family, right? And keeping in mind what the long term objectives were, which could be, let's say, if you were very young, married couple with no children, it could be as simple as buying your first home, or maybe planning that big vacation or some other experience, or if you had young children, planning for their college education, in certain instances planning for retirement, whatever it was. I mean, people have multiple financial goals, and we would kind of take into account those goals before we did the entire financial plan. And once we had sort of arrived at the financial plan in consultation, with the family, then we recommended what products they needed to buy. Did they have the adequate protection in terms of health insurance? adequate protection in terms of life insurance, then savings products, whether it were mutual funds, whether it was fixed deposits. Then again, if the financial goal was buying a home, then did they have enough to put down a down payment on a mortgage, and helping them take a mortgage, identify the real estate. It was an entire range or a bouquet of sort of financial products we offered to them. And real estate at the end of the day is an important financial goal for people. If you're a first time home buyer, it's an important goal. If you already own a home, it could be an investment product for you, buying a second home or some other piece of real estate. So I kind of don't see it entirely separate, from financial services in that sense, because it is
True.
an asset class in its own right. If you look at financial services or a family's sort of financial well-being holistically, I think real estate forms a core piece of that. So in that sense, I didn't see it as a disconnect, or a real jump. In fact, what I realized was that as we did financial planning for people, you still had to do a little bit of explaining to them. And keep in mind, it was back in 2006 or seven, that you still had to explain to people, right, why they should buy insurance. People, know at a young age, or even when you're 30, 40, no one believes that they're going to fall sick, or they're going to die. And it's only when post facto things happen to people sort of realize that things went wrong, right? If you spoke about retirement, people were like, "Hey, I'm still young. I want experiences. Why bother about retirement today?" So all of it wasn't easy to convince people to kind of look at a financial plan holistically. But if you look at real estate, pretty much I would say 70 to 80% of people, if not more, wanted to save up money to put down that down payment on a home, then take out a mortgage and buy a home. So we realized that the biggest pull that we had for a particular financial product was really real estate. So that kind of gave us the conviction that doing a our next venture in real estate was the smart thing to do.
Got it. Got it. So, an insight which you picked up at iTrust, I think that made you venture into
That's
starting a
right.
real company, which is PropTiger. So, just wanted to understand, right? When you started PropTiger, what kind of problems were you looking to solve? Because obviously, that time the real estate industry was very different. It was fragmented, right? And there was not a lot of tech being used in the real estate industry.
Look, when we started, uh, uh, Ganesh is back, as I said, about 2006. Um, there was a lot of mistrust in the sector at that point in time. While we were doing iTrust, we realized um, that there were a lot of developers, who were sort of fly by night operators, launching a product, marketing it, literally sort of peddling it almost, right? Something which they never intended to complete. Whatever money they collected, they kind of bought more land, put it into another project, and none of those projects saw light of day, right?
Yes.
There were enough developers out there who were sort of long-term developers, had built a reputation in the market, were very strong, right? They were finding it hard to distinguish themselves in the market as well, because the entire industry had got such a bad name, right? So part of what we were trying to do was actually bridge this trust deficit, right, which
Correct.
consumers had for the sector, where they didn't trust developers, and were painting all developers with the same broad brush, which is not a good thing. You always
Yeah.
have good apples and bad apples, right? So our job was to say, hey, look, uh, we are there as your trusted sort of advisor in the middle. We'll curate the right developer for you, the right property for you, and we'll help you buy that, right? And we are there, right, to respond to any questions you have. Ensure that whatever investment you make or product you buy,
Got it.
will be the right product. Of course, beyond the point, we couldn't take responsibility for what the developer did, but our best attempt at that point in time, and it continues to be that way even today, was to identify the best product for our consumers. On the developer side, the idea was again, if you were a good developer, we were convinced about your credentials, your track record, and your intentions. It was our duty then to help the developers also distinguish themselves in the market and say, hey, look, we'll help you market your product. We are a trusted advisor. We are seen as a neutral party. We'll help you market your product. So I think we were helping the developers, stand out in a market which was, full of mistrust, plus also help the consumers, discern, who the right developer was. Because at the end of the day, you don't want people not to invest in real estate. I fundamentally believe it's an important asset class, should form a piece of your overall assets, and hence we felt almost obligated to help consumers do that. And just to kind of again refresh, we came from this background of running iTrust,
Yeah.
where we wanted to do the right thing for the consumers and ensure that no products were being missold to them and they got what they wanted, keeping in mind their personal financial situation and their personal goals. So it was the same sort of thesis at PropTiger as well, but this time around it was also trying to help the developers, kind of distinguish themselves or differentiate themselves in the market, where there was a lot of mistrust. So that was sort of what the idea was.
Got it.
So,
Got it.
Dhruv,
So,
just curious, did you face any issues at that time, let's say raising funding for PropTiger? Because I think you were doing completely different to what other players, such as 99 Acres, were doing, which were purely focused on the discovery aspect. And I think you were the first successful online transaction platform. So,
Yeah, so look, I don't want to take undue credit for being called the first one in the space. I think 99 Acres had already launched something called All Check Deals, and which was exactly what Prop Tiger was modeled on. 99 Acres or Info Edge rather, and they decided at some point to not really pursue that model because they felt that for them the classifieds piece made more sense given the their overall portfolio and what they sort of did really well, as an organization. We also had another competitor at that time called India Homes, which had raised capital, if I recall correctly, from Foundation Capital, again a blue chip VC, out of Silicon Valley. And I think we contemporaneously raised money with them. We raised money from again, SoftBank came on board again in this venture as well, and a few other well-known angels, as well as a Singapore entity called Horizon Ventures. And then very quickly we got Axel and Safe Partners on board as well. Now Safe is known as Elevation, as you would know. So yeah, we also kind of pretty much around the same time as India Homes raised capital. So obviously there were questions at that point in time, around scalability of the model, around whether it would be a winner takes all kind of business, like portals tend to be, right? Typically, if you see the portal business anywhere in the globe, the number one player takes a disproportionate share of revenue and profits, right? That's not the same with a brokerage business, even if it's tech enabled, because it is a highly fragmented sector, and nowhere in the world you really see brokers taking 40, 50, 60% market share. China might be an exception, where one player has done that in a couple of markets, but I think in most places it doesn't happen that way. So those questions were asked, but again, I think the fact that we were coming off our iTrust experience, truly understood the consumer and what drove the consumer, I think convinced the VC that it was something they'd want to invest in. Look, fundraising is never easy.
yeah.
I think if you have a good business plan, you have the right narrative, and you have the right vision, backed by commitment, and the passion. I think VCs are willing to back you. That's what they do, right? They not everything which a VC invests in succeeds, right? But they really look at a big market opportunity. They look at who the founders are, the entrepreneurs are, how passionate are they about the space, and then
Yeah.
they decide to invest or not. So I think in our case it was no different. Real estate, as we know, typically tends to be anywhere between, I think in India it's about 6 to 7% of GDP. In China it's even higher than 18 to 20%. So it's a big component of GDP. So it's a sector you can't ignore. So which is why I think even today, as you guys look at the space, I think the opportunity for startups in the space is massive. We're barely scratching the surface, and multiple big businesses can be built in this domain.
That sounds amazing, Dhruv. And it actually gives us a great segue into your next chapter of your journey, housing.com. So, like in 2005, housing.com, there were a lot of players in PropTech at that time. Uh, one key thing that we want to understand from you is how you came about making that decision to acquire housing in the first place, and what were the underlying factors you felt that drove that decision?
Look, see, we acquired Makaan.com first in 2015, uh,
Yeah.
and we sort of did that acquisition because although Makaan was a distant sort of number 5, 6 player in the market, but we firmly believe that PropTiger was limited by its ability to attract consumers at the top of the funnel. So the way the entire home buying journey is, people are undecided whether they want to rent a home sometime, whether they want to buy a home, whether they want to buy a new home under construction or a resale home. A lot of those decisions are open, right? People don't just go in with their minds made up, right? There's a journey which they sort of traverse, which could be as long as 3 months to 6 months, right? Um, and PropTiger, as you know, I don't think I clarified it up front. Basically, works only in the new home segment. So we help developers market their new developments, and consumers buy new homes. We don't sort of work in the segment of resale homes, where if one current owner wants to sell to a potential buyer, we don't sort of facilitate that at PropTiger. So the fact is, we were sort of in the new homes business, and uh, what typically happens is that once people made up their minds, they'd already traversed that journey, right? Where they had said, okay, we won't rent, we'll buy. We won't probably buy a resale home, but buy a new home. That's when they came to PropTiger, right? And it was a very small funnel coming to us, right? Cost of acquisition was becoming higher for us. So we said, look, let's actually get to the consumer early on in their journey, right? And that's what the portals do. People, might not even just be making a decision on renting or buying a home. They may rent a home today. Ultimately, they become new home buyers, right? So we wanted to get on to the consumer or get the consumer on board at the very early stage of their home renting slash home buying journey. And we believe that the portals are the place where you can do that. And PropTiger is playing only in a very small sliver of the market. So that really what prompted us to buy Makaan. And of course we bought it. We invested in sort of rejigging the whole portal, redoing it, changing the consumer experience. And then the housing opportunity came along. Our intention wasn't to kind of do a second acquisition, to be very frank. But when the opportunity came and became available, we felt it was probably the right thing to do because housing had already built a very strong brand. It had amazing user experience. Uh, it had raised a lot of capital, had some great technology, and had many things going right for it. It's unfortunate that they ran into sort of internal issues, and things went the way they did. But in retrospect, it was a good thing for us because the asset became available, and we made the acquisition. Um, and as they say, the rest is history. Today, we are the number one portal in the country by audience,
Yeah.
and we've sort of been in that position for the last 6 months now, or 7 months. And it's been a journey. We acquired that in 2017 January, It has taken us a good 5.5 years to get to that position, but we are there. That was what we aspired for, and we are there. A lot of investors that time who were our existing investors said, "Hey, you're stepping into a sinking ship, and you sink along with it." And my belief was that, look, at the end of the day, it was a business. Whatever had happened had happened. It was a good product, and if we were smart about running it, I think we could really, really, build leadership. It was the conviction we had, and we acted on that conviction. And today, as I said, with the number one portal, by audience, and quickly getting to number one in terms of brand awareness as well as revenues.
Absolutely, absolutely. Housing.com is definitely, considered one of the biggest turnaround by a company, right? Like the team and culture, restructuring the organization. It was already pretty well known at that time, and then like you said, it was sort of a sinking ship, and then you had to come in, kind of restructure everything. Number of homes listed on the platform went up by over 400%. The traffic increased by over 200%. So definitely, it was a very uh, from outside it looked like a fantastic turnaround. So did you have any like particular strategy in mind, and how do you go about like restructuring such a big company to make it go upwards?
So look, for any sort of M&A to succeed, right? I think the most important thing is to really bring about cultural integration, as they say, right? Most M&As that fail because of culture, and frankly, a lot of M&As out there don't succeed at all, right? So it's literally like, I don't have real data on it, or stats, but a very small fraction of M&A succeed, and most of them that don't succeed, I think, fail because of cultural integration issues, right? You acquire a company, and it's just not in sync with the DNA of your existing company, and things go southwards pretty quickly. Uh, so for us, it was more about, first, during the diligence process, coming up with an integration plan, right? Because sometimes what the mistake companies make is they get trigger happy when they're acquiring, they do a diligence, but they forget about how they're going to integrate the company. And the entire exercise of integration begins the day the deal happens, right? That, I think, is a lesson I learned very well at GE, because I did M&A at GE for a year plus. And what I realized, that while you were doing diligence on the company, making a decision to buy or not to buy, we were also simultaneously getting ready with an integration plan. And whether the deal happened or not didn't matter. You had an integration plan ready, right? So that's exactly what the case with us was. That the day the deal closed, we knew exactly what to do next morning. We had our steps laid out. We knew exactly who would be in what position, leading what. We were very clear about uh, when we wanted to integrate what function, keep what function separate, etc., etc. So clearly there was a plan. Second thing we did was, we made sure that within the first couple of months, of the merger happening, we did this sort of all hands on deck event with the senior leadership. But when I say all hands on deck, what I meant was senior leadership and mid-level leadership from both companies, Housing on one side and PropTiger and Makaan on the other, to come up with a common vision, mission, values. I think that kind of made everybody feel part of one team, because we didn't say that, look, Housing, you now have to start following our vision or our mission or our values, right? Let's all co-create a new vision. Let's co-create a new mission. Let's co-create what values we want to kind of conduct ourselves, by on a daily basis. I think that brought together a lot of ownership amongst the leadership team on both sides. And look, we had people who left the company, who felt that there might not be cultural fit, there might not be a future. But frankly, there were enough people who stayed back, without whom we wouldn't be where we are today, because there was a thread which they sort of carried from what they were as a company to today where we are. And that thread basically was people, right, who stayed back. So I think that was really, really important. we've had some key members of my team, right, who came from housing. So that was I think super critical in ensuring the success of the integration. Because so it's all about planning. It's all about the right sort of integration strategy as far as culture is concerned. And then a lot of communication, right? You have to ensure that people know what you're doing, because when any kind of merger like this happens, there's a lot of uncertainty on both sides, not just on one side, on both sides, because people are like, look, there's a X role there, there's an X role here, there can only be one. Who is it going to be, right? So the worst thing you can do is not communicate quickly, because then all your good people leave, because there's so much of uncertainty. So the other thing is a lot of communication, transparent communication, town halls, small group discussions, everything, and honestly answering everything. The worst thing you can do is, be disingenuous, right? You say something and you do something else. Instantly you break trust, and whatever else you say and do after that doesn't work. So very, very important to have open, honest communication, and that I think is the sort of key behind any successful integration. That's what happened in the early days, honestly. And then, of course, I think we were very hungry as a company. We truly believed that the market leaders, hadn't broken out like in other countries. You look at, Property Guru in Singapore, or the REA Group in Australia, or Rightmove in the UK. They've sort of established clear leadership position, right? Very, very hard for a new entrant to catch up. But that wasn't the case, in India. So we were convinced that we had a shot at getting to number one, and a real shot. It wasn't some kind of a pipe dream. I think it was an ambition backed by conviction, and also backed by the fact that there was a clear runway which we could see, to getting there. And yeah, and that's what sort of led us to where we are today. Where, as I said, we are number one by audience, and catching up very close, and rather very close in terms of where we are in terms of our brand awareness as well as revenues. So we are very confident that in the next 2 or 3 years, we have a clear shot at being number one, on all these metrics, not just audience.
So, Dhruv, one part is integration of housing, Makaan, and PropTiger. Other is turning around housing, which obviously, as you said, was facing a lot of internal issues. People were questioning the financials of the company at that point of time. So, what do you think in the early days was the key factor which led to this turnaround very quickly? Maybe it was focusing on certain core business aspects and making sure the business was correct, and then scaling and launching other services.
I so you're right. I think one was, of course, the integration, as you rightly observed. Uh, Post that, you take a step back and see that what's good, and what's working, and
Yeah.
what's not working or missing, right? It's very important to understand that, because sometimes the temptation is change everything, right? And then you can again go wrong. So it takes a lot of hard work to first identify what's working, what's not working. So when we looked at the product, and we looked at the UX, even till date, we've tried to kind of retain that ethos, or that flavor which housing had from day one, and what it was known for, right? And that, we said, is something which works, and we zealously protected that, right? I think what wasn't really working well was the sales engine. So we hired a new sales leader. Uh, and that person really sort of drove a sales DNA into the organization, right? And of course, from PropTiger, we already had a very strong sales DNA, but we kind of instilled that into housing. That, I think, was one important change. There were a couple of lines of business which were not focused on. Housing had moved away from the broker business, as in selling listing packages to brokers. We brought that back. They had moved away from doing rentals, which they were known for originally. We
Yeah.
sort of brought that back. So we realized that as a portal, we needed to be more sort of holistic, for the same reason I told you earlier, because people are fundamentally not decided what they want to do when they're looking at buying a home or renting a home, right? It could be buy, it could be rent, it could be new homes, whatever. So So I think we brought some of those business lines back as well. And then post that, there was a relentless focus on audience and traffic. Any portal, their lifeblood, at REA Group, which now owns us, they call it the air we breathe. That's the phrase they use, and that's exactly what we said we're going to do. Audience is the air we breathe, and we need to make sure that we get to number one in terms of audience. That was the biggest thing REA Group taught us, when they invested back in 2017, at the time of the housing acquisition. So there was a relentless focus on getting to, number one, on audience. It wasn't going to be an easy ride because, people can go out and buy audience as many people are doing today. But ours was all about how do you get, to number one on organic audience. That was the key, right? And yeah, I think in every single town hall and every single review, all I asked was where are we on that. So it was literally making one particular thing, almost like a mission, and that's what really drove us to this position where we are in
Yeah.
today. And the moment you start getting to leadership position on audience, everything else follows, right? The salespeople are able to sell a package to a developer and a broker or a
Yeah.
homeowner much more easily because they can talk about, hey, look, people are actually coming onto our platform who will view your listing, who will come onto a platform where there are no no visitors, right? So that's why I think it all starts from audience. There was a relentless focus on that. I'm happy to say that that kind of focus, that sort of laser-like ambition to get to number one really helped us get to where we are today.
Okay, so just to follow up on the RA deal when they first invested in you in 2017, and I think in 2020 they took a large ownership of Elara Technologies. Can you just walk us through the deal? I mean, it sounds very exciting sitting down with Rupert Murdoch and getting him to invest in your company.
Look, News Corp came in. News Corp actually owns about 62% thereabouts, of REA Group. REA, of course, is separately listed on the Australian Stock Exchange. But News Corp came in as an investor in 2014. We were very excited because it was News Corp. It wasn't some side pocket investment of theirs. Almost 40% plus of News Corp's global EBITDA comes from real estate business, the digital real estate business. It was a very important investment. They made in us. Obviously, I was very excited because I had to meet Mr. Murdoch before the deal actually got signed off, which was a very exciting moment for me personally as well. And then, of course, a lot of the brainstorming, decision making, etc., around getting into the portal business, not getting in the financing, etc. They've been big supporters of us. And then when the housing deal happened, REA came on board as an investor as well. And today, as we speak, between News Corp and REA, they own the entire company.
Understood.
It's been a fantastic outcome for us. They've supported us through tough times. When others couldn't raise capital, we had the capital. During COVID, when most people had pulled back on advertising, were firing people, we didn't do any of that, and that's what's really helped us get to this leadership position in the last 2 years.
Okay.
Got it.
I think it's very important to have high conviction investors, who help you throughout your journey. And as you said, yeah, sorry, go ahead, Dhruv.
No, I'm going to say that look, they're not looking to flip this business. I mean,
Yeah.
they bought us in order to run this, grow this, become the market leader, and ultimately start generating profits, right? So I think we are clearly focused on that. It's not about any vanity metrics, for us. So audience for us is not a vanity metric. It's a metric which ultimately drives revenues. And once you get to leadership position on audience and revenues, you ultimately become profitable. So the goal is to become the leading digital real estate player, and that to become profitable, not just
Yeah.
have vanity metrics such as highest audience, highest brand awareness. You got to ultimately return money to shareholders.
Correct.
Definitely.
So
Dhruv,
yeah, so as I
just
was saying,
wanted to.
Elara, I think,
Sorry, Jay.
has become one of the biggest real estate players in India.
Yeah, now we've in fact rebranded Elara to REA India, so now we are
Okay.
referred to as REA India.
Okay, RE India, got it.
Yeah,
So yeah, so as I said, RE India has become one of the biggest, real estate ecosystems. Just a final question: how do you look at integration? And correct me if I'm wrong, but when I look at PropTiger, Makaan, and housing, I think Makaan and housing play a very similar role, which is the discovery aspect. So how do you go about ensuring that both these platforms provide a different value to your ecosystem, and at the same time they're operating as a different brand and different culture altogether?
sure. So look, Makan, so far, now things are changing, but in the early days, Makan was very strong in tier two cities, had very little audience overlap, with housing, and therefore they kind of helped us, across a different segment of consumers. Uh, Now, in the last 2 years, kind of audience growth housing has seen, I think the overlap, in audience between housing and Makan has gone up considerably. So now Makaan operates more as a flanking brand to housing. Our go-to-market brand is housing.com. All the big investments that's happening in the portal piece of the business is all on housing.com, and Makaan is acting as a flanking brand. So you really can't go out and buy a listings package on Makaan alone.
Yeah.
You have to buy it on housing, and you can, if you're interested in Makaan as well, you can do that. But it's really like a support brand to housing. The PropTiger business, on the other hand, is a fundamentally different business. It operates as an online brokerage in the primary segment, and that we continue to grow and invest in separately. They operate, very very independently as two different businesses with very different value proposition for consumers as well as developers, especially in PropTiger's case.
Got it. So, Dhruv, just wanted to understand, right? How do you think your mindset has changed from a corporate environment like GE to then becoming a co-founder of PropTiger and then a CEO of, Elara, which is managing three big titans? So, how do you think that mindset shift has, been for you?
Look, really honestly, my mindset has always been a singular mindset, which is an entrepreneur's mindset. I come from an entrepreneur's family on both sides. My mother's side of the family, bunch of entrepreneurs, very successful. Same thing on my father's side, right? So I basically had an entrepreneurial DNA going up. Every single conversation around the dinner table was around entrepreneurship and building businesses, right? So in that sense, my mindset has always been an entrepreneurial mindset. And my fundamental belief is that you don't have to be an entrepreneur to have an entrepreneurial mindset. You can have an entrepreneurial mindset even in a large corporate, right? I never subscribe to a corporate way of working necessarily, and I'm not saying that it's good or bad. There are sort of lots of limitations and guardrails you need to have, right? Working for a large company, right? You cannot sort of, as they say, right, in Hindi, हर एक कंपनी की एक लक्ष्मण रेखा होती है, you can't cross that, right? But within that, you can be very entrepreneurial, right? As an entrepreneur, you write your own Lakshman Rekha, right? And you work within that Lakshman Rekha, which can change because you are the entrepreneur, you are your own boss, right? You are the founder of the company. But in a large corporate, I think within a certain sort of framework, guideline, certain guardrails, I think you can be very entrepreneurial. If you choose not to be, that's your sort of own problem, right? You can take risks which are well within that framework again, which allows you to go forward. Sometimes your bet may work, may not work. The entrepreneur, if the organization's culture doesn't promote entrepreneurship, doesn't sort of reward failure, then you might be in the wrong place. You got to shift corporate you're working for. But otherwise, there are enough corporations out there, which, as I said, within sort of their guardrails, give sufficient leeway to people to take risks. And even if they fail, treat that as a learning experience, and then you move on to the next big thing, right? Of course, assuming that you sort of learn from experiences, right? So I think that for me, I continue to act as an entrepreneur. Even I used to act entrepreneurial when I was at GE. I used to be very mindful of which hotel I booked, because I was like, I don't want to spend more money than what I should be, even if my entitlement allowed me to do that, because I that was ownership, right? So ownership uh, is a trait which you can display anywhere, whether it's your own company, whether it's a large corporate. So in that sense, my mindset's the same, not really changed.
Yeah, that's a very good point actually, and we've gotten this feedback from millennials and all. People are really nowadays they look a lot at their own financials. People are when investing in real estate again, they're slightly concerned, and we've seen a little bit of shift there that people don't want to necessarily own their homes. Homes are expensive; they're renting them out. Um, but apart from that, what other ways do you see that real estate as an investment is like still a very good option? Like you mentioned that in iTrust, you were still looking at all those things, and you were still convincing people that it's definitely a huge part of your portfolio. But how do you see that shift, and what other way do you see investing in real
Look, I
estate?
mean, my view is that real estate is a very important asset class across the globe, even today, right? In the environment which we are currently in, and what at least I expect for the next couple of years, is going to be highly inflationary. Real estate is one of the best inflation hedges, right? So can't be a better asset class to be in, at this time, if you ask me. Uh, so clearly, as part of any portfolio, I think real estate should definitely be present. Sometimes as they say, all asset classes don't perform. Of course, unless it's like something as crazy as COVID, or like what we saw in the financial crisis, when all assets tend to kind of deflate simultaneously. But mostly, I think they have sort of different ebbs and flows, right? So I think it's a great diversification tool as part of your overall financial portfolio. So there should be some portion of real estate, in your overall asset allocation. Um, but even before that, right, home ownership. The question is whether one should own a home or not. I know that the younger millennials, especially, believe in experiences. They don't want to get tied down into a single place by buying a home. So stuff like co-living, shared accommodation is a great option, right? Or just renting a home and not blocking all that capital, right, in a home. But I think post-COVID things have changed. People have realized that in a world where something like COVID could happen, where your home was really your only safe haven, right? Uh, Probably owning a home is not such a bad idea. I think so. This whole perception towards home ownership, I think, has clawed back a little bit. I think where we also used to wonder, as a company, in the real estate space, selling real estate, that look, 20 years from today, would people buy homes or not, right? Because if everything moves to shared accommodation, experiences, people not wanting to get tied down, who would buy a home, right? I think that has been reversed a little bit, because of COVID, and I think people's perception has now changed in the other direction. So I believe that home ownership is here to stay, and look, for people who want to become homeowners, my advice is it's never a good or a bad time. Don't try and time the market if you're looking to buy a home. It's something where you live in. Even when people look at a person's portfolio or people's assets or net worth, they say it's minus primary home. Primary home is a place where you stay, so it's never a good or a bad time, right? I always recommend to people that look, even if you can't afford your dream home which you really want to live in, buy a small home, right? Get onto the ladder, as they say, the real estate ladder, right? Buy that, rent it out, and stay in the rented home which is your dream home. Later on, as you can afford it, you can always trade, right? Sell that cheaper home and buy a more expensive home. But just get onto the real estate ladder. Don't wait. Buy what you can afford today. So it's very, very important to get onto that, the sooner you can. And the moment someone's willing to give you a mortgage, to be able to, buy a home, do it. Whatever size it is my only advice as people look to get, into becoming homeowners.
That sounds like great advice, right? Like everyone, like even though like people are moving away from it, we personally believe home ownership is definitely a very good investment opportunity for you. Do you feel like there's any other way people can invest in real estate? What other ways have you invested in real estate? Any
Look, there are
advice there?
lots of ways. I mean, REITs have become popular in India, although there aren't too many out there. That's one way, without, because see, real estate at the end of the day, there are certain disadvantages of it as an asset class, right? I mean, it tends to be chunky. You got to put a certain basic
Right.
money amount of money. Even if the advice I gave you were to follow, you still would need to put down a certain minimum to buy a home, a small home. Uh, the transaction costs are fairly high, because stamp duty. You can't unwind, part of the real estate, right? I mean, if today you need capital, you can't sell one bedroom or one bathroom, right? You got to sell the whole property again, and it also takes time. And invariably, the bid ask spread tends to be very high. When you are sort of are in urgent need of cash, right? So it has its disadvantages. So in order to kind of avoid some of the things I mentioned, REITs are a fantastic way of investing. You can buy small units; they're tradable in the market. You can get in and out very quickly. You can, sell one unit, two units, retain the rest. So it gives you all these sort of advantages that equity gives you, right? At the end of the day, is bite sized, it's tradable and all of that. Plus, it gives you a yield on an annual basis, and you get to enjoy the capital appreciation over a long period of time. So REITs are one way of investing. Um, I think, as we look at other interesting asset classes, whether it's, healthcare assets which generate income, or data centers, or other, commercial assets, co-living, co-working, lots of different things. Ultimately, it can all be packaged, together, and then, made into a REIT, which will again give you an opportunity to invest in real estate. So I think that journey is just beginning in India. I think the opportunity which we're going to see is going to be, massive going forward. And then, the other thing, of course, is I think there's huge opportunity, maybe not in India yet because of regulations, etc. But ultimately, real estate can be tokenized as well, which is even sort of smaller probably tickets than REITs, right? And possibly open to global investors as well, right? So I think you will see a lot of innovation happening in real estate investment products in India over the next several years. And as I said, right, this is an asset class you cannot ignore. And I would sincerely advocate people to look at real estate from the point of view of diversification, and also from the point of view of just getting onto the home ownership ladder.
So, Dhruv, as you
Yeah,
rightly said,
that's fantastic advice.
yeah. So, Dhruv, as you rightly said, there's a lot of innovation happening in real estate. You have digital land, metaverse, fractionalization, tokenization, but Indian real estate is completely different than Western real estate. So, what certain trends are you bullish on that would work in an Indian context, or Indian consumers would be more open to?
Look, my view is that, see, it's about market maturity, right? There's no reason to believe. I mean, if you looked at the insurance industry 20 years ago, you would say that, look, it's far behind what you have in the West. Today you have pretty much any kind of insurance product that you want to buy is available in India, right? So I think it's a question of market maturity. We've just been through such a long down cycle in real estate, residential real estate especially, between 2013 and 22, that some of the innovation may have sort of stagnated. But look, I mean, the fact that people are looking at co-living, co-working as asset classes. You spoke about enough, about fractionalization, right? Bunch of startups doing that. It's all innovation, in my opinion. So ultimately, I think as the market matures, we will not only catch up with the West, but we'll also have products which are sort of more suited to our own sort of peculiarities, or uniqueness as a market.
That sounds great. And since you mentioned REIT and tokenization, we're actually huge proponents of investing in lower ticket sizes because again we feel how we've spoken with our investors that the entry barrier to investing in real estate is one of the major hurdles
Exactly.
when people are looking to invest, right? And so yeah, definitely REITs tokenization. We're big fans of that. So just a quick question: are you personally investing in these sorts of assets? Let's say tokenization, metaverse, and stuff like that. Are you interested in that concept?
Look, see, depends what you tokenize, right? You can tokenize a real asset, hard asset. You can tokenize something else, right?
Yeah.
So personally, I've not invested in a real estate token yet. But look, talking about the metaverse, I think clearly, there is an audience, for that. There are enough, metaverses out there, which have become massive in size and scale. People are spending inordinate amounts of time there. They probably identify more with their identity in the metaverse than in the real world. They possibly see themselves more as citizens of the metaverse than of their own countries. It's happening. We can't be in denial of that, which means that owning a piece of that metaverse, in terms of land or an asset, is for real, right? So I think it's going to be. I think in the beginning it's going to become a little bit more cultish, where if there's a particular platform you're passionate about, the rules governing that platform is something which you kind of get drawn to, etc., etc. You would want a piece of that, right? Now, whether owning your own address, let's say if you live in a house and that gets, you can register yourself on the metaverse for that particular home. what that which metaverse is that going to be, and if it's going to really create value for you, I don't know. So really it's early days. Hard to really predict which way it goes. But am I a believer of this? Absolutely. I think anyone who poo-poos this and says it's just a fad, I think is making a big mistake. It's going to happen. Whether it happens in the next 3, 5, 10, I don't know, in terms of years, but it's going to happen. So in short, if anyone understands it well enough and has conviction, go for it. To succeed in anything, right? The most important thing is, you have to really have a good team, right? I mean, that's a starting point, because there's only so much you can do just by yourself. So it's very, very important to put a good team around you, empower them, trust them, not second guess them, and allow them to run. Right? I think that's key, because if you want to build and scale an organization, you need good people. Second, I think, is resilience and conviction. If you're doing something, you got to believe in it. You got to stick it out. Right? Businesses aren't built overnight. I think many of the success stories, which we are hearing of, this became a unicorn in 6 months or 12 months or 18 months. That's a paper number, right? People are yet to deliver on revenues, on profits, and many other things investors expect of them, right? There's going to be a long haul for many of these companies. So success is not measured, in terms of the value you achieve, in 6 months, but the value you deliver and create, over an extended period of time. So that resilience is very important. The willingness to stick it out is critical. Doesn't matter which sector it is. Um, and then the third thing is, what I always believe is, you got to be passionate about what you're doing. I mean, you have to be wanting to wake up every morning and come to work. I mean, as an entrepreneur, you basically, go to bed thinking about, your business. You wake up in the morning thinking about your business, and you're 24/7 on it, right? Yes, I think you got to manage. I'm a great advocate, now, especially of personal health, work-life balance, and all of that. A few things I neglected in my days as an entrepreneur, but I've sort of brought focus back on that. I think it's very, very important to do that, but you have to have the passion, and so the passion is what sort of really keeps you going. And because it's a marathon, as I mentioned earlier, I think focus on self and family is crucial, because you can't ignore them for extended periods of time. So I think these are some of the things. I mean, there are a bunch of other things. That's, I think, the topic of another sort of podcast. But I would say these three sort of things come to me top of mind.
Got it. And Dhruv, as you rightly said, businesses aren't built overnight. Very similarly, wealth is a long-term journey. So, any advice, three tips to our audience, what worked for you in building wealth over a long period of time?
No, look, I mean, what I said is part of sort of, I think, what were the factors of success. I think also have lessons embedded in them. One of the things which I always tell people is that, look, everything else is a byproduct, right? Wealth is a byproduct. There's no recipe for creating wealth. I mean, you cannot have wealth as an objective, right? It's a byproduct of what you do. So one should be focused on that. One should be focused on building a good business, which solves a particular consumer problem, or changes the way the world operates, right? It's got to have a higher purpose. I think that's really, really important, as you get into a business. It should not be for the money. Clearly, money is always an outcome. The second thing, I always tell people is that, uh, if things don't go well, don't beat yourself up, because many stars need to align, for a business to be successful, for a startup, to become successful, right? Uh, you know, Even a small misalignment somewhere, wrong place, wrong time, whatever it is, right? Somebody just gets funded, a week before they meet, someone met you, can change things for you, right? So a lot of alignment needs to happen before one can become successful. Don't beat yourself up if you don't do too well. There's always a next time. And also similarly, on the flip side, if you're successful, be grounded. There's a lot of luck which plays a role. For every successful entrepreneur, 99 sort of failures, any of those 99 could have been, in the successful entrepreneur's place, right? So luck plays a big role. So just sort of be mindful of that. I'm not discounting effort. I'm not discounting talent at all. But we shouldn't, underestimate the value of sort of things falling in place, right time, right? Maybe you can call me philosophical, but I truly believe in that. So always be grounded, when things are going very well, and at the same time, don't beat yourself up if things are not going so well, because ultimately, you're a little one person in the grand scheme of things, and many things need to fall in place for things to go right.
I think the luck aspect is, very important. One thing that we kind of follow is we do things that increases our chances of getting lucky.
Of
Uh,
course, absolutely.
yes. So again, thanks a lot, Dhruv, for taking out the valuable time and having being a part of this podcast. The insights and the wisdom that you provide is something that we'll also follow at proper terms while we're scaling our company. So again, thanks a lot, Dhruv. It was great having you over.
No, likewise, Jayan, Kanish, and Somil. Nice chatting with you, and all the best.